to mainline operators. We are dominant service provider calling all major ports and terminals from Mundra to Kolkata and all the way along the peninsular Indian coast. And additionally, we are moving non-containerized cargo to improve the yield on our asset. That's what we have been doing for besides the non-containerized, the bulk cargo, street coil cargo, and ODC shipment on our container vessels. The following strategic decisions were taken to boost growth and shareholder value. We required vessels with higher tonnage and lesser age at economical value. Where, if you recall, we sold 2 vessels which were commercially uneconomical and older vessels, and at the same time we purchased 2 vessels during this year which are larger tonnage and are more economical vessels. We also reduced the cost of operation by way of changing the vessels, and we reduced the fleet age. Surely enough, we have done a better utilization of our asset in the last 2 quarters and continues, which has given us a better result. We have enhanced the area of coverage with regards to coastal shipping. Earlier we were mainly on the west coast of India. Slowly we extended up to Kakinada for FCI cargo, and then now with the new service we have extended our services right up to Calcutta. So we are giving a direct connectivity from eastern and southern coast of India to Middle East port also, with the new service going right up to Jebel Ali. These actions working in tandem have yielded the desired result for the company. Going ahead, if you see the queue capacity change, last 2 years, 2012 and 13, as well as 13 and 14, we had a steady tonnage that we with 7,299 queues. During the year 2014-15, we increased the tonnage to 8,295 queues. That is, 2 smaller vessels have been sold and 2 larger vessels have been acquired. That with this acquisition and change of the vessels, we have also increased the deadweight of the deadweight capacity of our fleet. That goes from 105,624 to today 131 deadweight ton. Depth per queue, if you see, we had in 2012-13 2,250. In 2013-14 we had 1951, and consequently today, with after the acquisition of the 2 vessels and change of 2 vessels, we are in the range of 1786 per queue, USD per queue. So we have been able to reduce the depth per queue. The fleet age also has been reduced by acquisition of newer tonnage. Where earlier fleet age was 20 years, in 2013-14 it was 21 years, and now we have a fleet age of 19.67 years. As regards to the opportunities, India presently handles less than 7% of domestic cargo moves through the coastal route, while China has got 30%, Europe has got 40%, US 31%. Therefore, definitely there is a huge potential for growth. While our railways are doing 30%, road is doing 57%. A very small quantity of movement is done through the sea. So we can always say we can look at a larger percentage on the sea route. Sea route definitely provides advantage of less loss of life due to accidents and shipping negligible, which is negligible compared with the road and rail. And there is a huge growth potential and lower sea movement cost, augur well with the growth of coastal shipping in India. Now, plans going ahead to work closely with the government to support Sagarmala project, coastal shipping, and integrate inland waterways network. We provide new market, acquire suitable additional tonnage, acquire economic and fuel efficient vessels, identify dry bulk cargo to fulfill the vision of the Ministry of Shipping itself, strive to transform India into a transshipment hub. Basically, if you see with the new service which we have started just about a few days back, we have taken care of most of things with whatever the plans and the government's vision for the postal shipping. We have basically taken care of tonnage. We increased tonnage as per the government's vision. We also started doing transshipment over Indian ports instead of the foreign ports. That's what government has been looking forward to. And also we have started direct shipment of EXIM containers into other foreign ports like from to Jabalali, from a place like Vizag and other ports in East Coast and South Coast of India. Thank you very much. And now going forward, as you know, Shreyas Shipping is just not a shipping company, it's also a logistic company, and our landside logistic is taken care by our 100% owned subsidiary Shreyas Relay Systems Limited, and I call upon Mr. Varadarajan, CEO Shreyas Relay System Limited, to take it forward as regards to Shreyas Relay performance.
Good afternoon, ladies and gentlemen. Shreyas Relay Systems Limited, SRS, is a wholly owned subsidiary of Shreyas Shipping and Logistics, a company which provides seamless door-to-door multimodal logistics solutions to the trade. Strategically, the company focuses on specific commodities and logistics services. This company is built upon providing customized solutions to its customers. So we look at key clients, their requirements, and basis that requirement, we create customized solutions. It's not that we create a product and then sell the product to our customers. We do a detailed research, do a lot of survey to understand what the customer requirements are, and then build that requirement as a product requirement for clients. Purpose is to give a one-stop solution to all our clients, so the product range is also accordingly there, and a lot of effort has gone to ensure that across the value chain we are present. A client's requirement, whatever is there across the value chain, we are present in various segments. Being in service sector, with a parent company having heavy investments in shipowning, it is very important that you also have a certain amount of infrastructure and assets available to meet the requirement of a client. I mean, just because you're in the service sector doesn't mean that you do not have a big asset requirement or infrastructure requirement. The model of the company is such that we made some selective investment in the infrastructure which is required, so that the customer's demands and needs are met well, and he is a satisfied customer for us. Being a company which sources cargo for our business, it is very important that we are very close to customer also. So accordingly, the company has spread itself across so that we are as close as possible to the client, either through own offices or through your own network. The company has been moving in a planned manner, taking into consideration a high attractiveness to a high capability as a base. You arrive at a space, and you can see the space. What we have highlighted here is the space in which the company is there. We are there almost in all that area which is there, except probably warehousing, which we're already discussing that we should enter it. And going forward, other areas like projects, liquids, and the e-com is where we are seriously studying the prospects to see how we can be present there. And when you say high on attractiveness, we talk about what is the industry size, what is the growth that industry can have. And in terms of capability, we talk about our own experience, our own relationship with the client, which is very, very important today. And basis that you arrive at a certain stage, which we are there already, and some of the areas which we'll be getting in the coming years. As I said, you need to be very clear and focused about the areas where you are concentrating and the locations where you want to be present. We are there from the Persian Gulf, India subcontinents, right up to Southeast Asia, on different product structure, different product offering. The company is working on this lane. And for this, on the transport mode, we present in shipping, present in road, we present in rail. Added to our infrastructure support in terms of containers, trailers, own offices and network. We believe this will give us a value proposition, and which is what we are working on. Basis this, the product offering the company has today are domestic multimodal coastal container services, regional liner services, road transport, rail transport, and international air and sea freight management. Domestic multimodal container service is a flagship business for the company. This is a company under which we carry the domestic cargo in containers within India. We had a presentation from Shreyas where they advised how much they have moved from west to east across, and accordingly SRS has also moved from west to east in totality. Area of operations, if I take into consideration, today we operate out of 14 states in India, carry about 46,000 approximate container on an annualized basis, and we've been growing at almost 20% year on year in this regard. This is a flagship business. This is where the company has been steadily growing in a planned manner. Regional liner service, this is where I mentioned the presence of SRS is across from Persian Gulf right up to Southeast Asia, covering India subcontinent. We have operation in 12 countries to about 14,000 TEUs annually. And here again, we've been growing year on year at about 23% on this. On the road transport, the company owns 56 trailers, specialized, customized to the requirement of its client. You can see certain trailers which are specialized for being used only in the terminal operations where we have placed them, to high-end vehicles which are used for moving tank containers and liquid cargo to certain spaces. We have trailers which carry general cargo and support our domestic coastal service, where the captive business is also supported through our own strength of having our own transport division. Majority of them, I would say most all of them, are fitted with GPS, so the track and trace is available. You can monitor, you can check as per the client requirement. Our significant presence is in containerized movement. So naturally the fleet of containers plays an important role, and that is what allows the scalability of operations for this company. So from 5,000 plus TEUs in 2012, today we have a fleet of 10,000 TEUs, various sizes of containers from reefer, flat rack, open top, so that various type of commodities can be carried in this. You could see about 5 years ago when we were predominantly just doing domestic container service and very small portion on the international side. Today the company has positioned itself as a logistic player. Various segments are also growing. while the percentage-wise the coastal percentage looks small, but in terms of volume it has increased over the period because of the size of the company has also grown the corresponding period. 13-14 when we did about 4 million tons of cargo. 14-15 we anticipate that by financial year in March we should close 5 million tons. In terms of revenue, from I've taken a 5-year back. In 2009-10, when we were about 90 crore turnover company, today we have moved to 309 crore in 13-14. So you all have papers for 9 months, whatever we have done so far, is also in line and in expectation as what has been planned for the company. Thank you, gentlemen. I now leave the floor to Rajesh Desai to take through the financials. Thank you.
Coast is comparatively much more heavier than what otherwise happened on the EXIM trade. So we had to find vessels which had suitable deadweight to carry all of this on board. So with this in mind, we went ahead, got rid of those vessels. We added substantially good vessels which had got sufficient deadweight. At the same time, those were far more fuel efficient. When I say that, they would consume maybe a little less fuel than what the smaller vessels were. But this we did no anticipation that we would also see the fuel prices that has gone down in the last maybe 3, 4, 5 months down to where it is at this point of time. We had no idea that it was all going to go down. But we took steps thinking that the fuel prices are going to be high. The decisions were taken to replace, added, etc., etc. But for us, the fall in the fuel price also helped us, along with the big decision that we took much earlier, to face the market and come out phenomenally strongly. That's why you see the result in the last quarter of 2014. 2013, we were sitting with a loss of 2.4 crores. And we made a very strong turnaround in this year. The other question that you asked about the kind of investment that the government of India is planning to put into various ports. Obviously, this investment that the government is talking about is predominantly to encourage coastal shipping, because the more number of ports, it doesn't mean that the bigger main EXIM cargo ships are going to call each and every port. So the more number of ports that we have alongside the country, especially in the vision of the ex-Prime Minister Vajpayee, he had the vision of having ports every 40 kilometers all along the coast, by which the industries could also develop. If this happens, I'm sure this will happen over the next few years' time, the demand for the coastal shipping, demand for the kind of goods and services that it really needs to move all along the coast is only going to quadruple. It is going to get more and more and more. That, coupled with the fact that the railways and the road traffic is severely congested, I don't think the Indian Railways can afford to take any more freighting business. Plus, the road is not in that great a shape to take all this significant level of traffic that is already moving. It is supposed to be activated. And also, our being able to cover the entire coast. Now, as we speak, we cover right from Calcutta, Haldia, right up into Mundra, every port. I mean, we call it Calcutta, we call it Haldia, we call it Vizag, we call it Katipalli near Chennai, we call it Tuticorin, we call Cochin, we call Mangalore, we call Goa, we call Mosheva, we call Hazira, Pipavav and Mundra. So we are virtually covering the entire port. We also do call Pakistan, Karachi, and also one of the services also goes right up into Jebel. So the ability for us to connect all around the coast is already there. Now here the question is, you can ask a question, in the advanced countries, the percentage of cargo that's moving by coastal shipping is close to 30-35%. In the advanced countries, you see it close to 40%. And there's a lot of inland waterways, river transport that is happening. In India, the level of movement of cargo by sea and river transportation is very, very small. Now, it can only go one way. It can only go northwards. Now is going to continue to be available for a company like Shreyas. Again, I must underline and emphasize here that whilst all of this is happening, our vision is not just to get straight jacketed into only domestic coastal shipping. That's the reason why we talked about Shreyas as a logistic company also to graduate to that position. You find a lot of e-commerce companies trying and pushing the job into the hands of the logistic company. But we want to also try the reverse of that. move on from here into that as well. So I mean, the opportunities are very big. We have to increase the assets that we have. We have to increase the number of containers that we own in our fleet. We have to look at various other areas, including refrigerated transport. GST is coming up. Warehousing is a big opportunity in India. Not necessarily that we have to invest money to build warehouses. Plenty of warehouses are available, which will all be sort of seized and opportunities will be used. We see the potential for Shreyas in the days to come is quite phenomenal. I mean, I don't have to spell it out. I mean, those of you who understand the general geography of the country will surely see that what I say is certainly there, and it is there for us to take full advantage. But only less than 4%, 4 to 5% is today moving by the coastal route. Ideally, in any good country, you have to get to at least 25 to 30% mark. So we are not even at 4 to 5% mark. Two, it's the chicken and egg story. The coastal shipping can grow on the back of the infrastructure that is available. But if we did not have the coastal shipping growing, it is also a scenario where the infrastructure in India was not there to facilitate the growth of the shipping, of this industry. Now what is happening is that the government has woken up to the reality and they want to have all of this in place. And it is our responsibility to ensure we are also having enough and more of tonnage to support that requirement. Not only to promote coastal shipping, one of the vision that our Minister and the Honorable Prime Minister have is to have transshipment also to Indian ports. With that in mind, we have identified Vizag, we look at Mundra, we look at Cochin. The three strong ports where transshipment business also is likely to happen. It only happens if the infrastructure is there, if the capacity is there. But that's the task that we have in there. Competition, you asked me. See, it's not. This is, I think somebody mentioned a while back. Shreyas is a company which is today available in the market. A logistic company available at the price of a shipping company. I mean, at the price of a shipping company. Somebody was mentioning this. The point here is that anybody can buy a ship and get it, a bulk carrier or a tanker or anything. Anybody can operate. But this business requires a lot of networking. This business needs a lot of hard work on the ground. And this has taken us a lot of time. It has not happened in the last maybe 1 or maybe 2 or 3 years. It's taken us a good 2 decades to get to where we are at this point of time. Again, I've not seen many people who have come in and have been able to sustain this operation for this period of time. A lot of people have come and gone. I think in terms of market share, within what is moving today, I would say we have a substantial market share, maybe close to 50% of the market is today driven by us. That doesn't mean that we lose our market leadership. We want to remain there and we want to increase our overall throughput, at the same time keep pushing our market share. But the network is very strong. It's very difficult for somebody else to penetrate and take what we have built away from us that easily. So we have a great chance to go forward in the coming days and years. So I think we could safely say that we were operating at about 90% utilization, but we've now added more capacity and connected the east coast of India. Okay. And again, our utilization has been around the 85-90% mark. Okay. But what was our problem over the years has been the ability to fill the cargo when we are coming back from the south to the north. I think after a lot of research and a lot of connectivity with customers, today what has happened is even on the way back they're able to reach 75-80% utilization, both from the domestic cargo as well as from the transshipment cargo. So this is helping us to keep the vessels well occupied. But again, as a company, our strategy is not to see vessels capacity at 85%. I think we want to have always a lax capacity. So when it is at 85-90, it's not a good sign. We need to have the capacity usage not more than 70-80%, which means we have to add more tonnage. Or maybe a little more than that.
Okay. What kind of tariff movement we have seen in the last 2-3 years?
Sorry?
Tariff movement.
Pricing, it's again a question of supply and demand. We are definitely much more competitive as compared to the rail and road.
No, I understand, but
what cost and the check. You're not every customer, every train, every user wants to see how his cost is remaining where it is, or he's able to get something better. The fuel price has only come down in the last 3 months.
Yeah.
3 months
now,
today.
What the customer are now saying? Are they saying the price cuts
Well, the customer, yes, they're always asking for something better than what they get. But there is also a cost for us to operate all of this. So it's very judiciously dealt with. Where we can afford to, we do, yes, adjust our prices. Where we can't afford to, where we think we have to make a certain return on what we are taking the risk and involving ourselves, we can't obviously reduce it. It's a question of supply and demand that dictates this fleet. If you looked at the numbers, we are looking at an average growth of about 20% year on year. So obviously we need to support that growth by adding tonnage. And as I answered the question of this gentleman, with no ports coming in, with no demand, more connectivity on the east to west, it is our duty to ensure that we are always providing sufficient capacity. I can say that we should be aiming to buy at least 2 to 4 ships.
Okay.
So I can't immediately tell you what sort of capex that we may have, but we.
Yeah, actually we are previous years we have hedged our fuel cost. Similarly, this time also we will be hedging our fuel cost. So it will at least for couple of years we will try to hedge the cost so that what if the fuel cost increases, that should not affect our profitability as well.
Sir, I'm looking at 5 years view. I mean, I'm not talking about a couple of years.
5 years, it is very difficult to say.
No, my question is very unique.
I get what you're saying. I'll give you an answer to what you're trying to ask me actually. When we took this decision of replacing some of the older assets with larger vessel and more efficient vessel, it was never taken on board that the fuel price is going to turn out and give somebody benefit. The fuel price worked to our advantage only in the last 2 to 3 months. Now when we keep hearing, it's anybody's guess. You talk to a big investment firm, he comes up and says, listen, in 6 months time the price can go up to 70, it's going to stabilize at 70. You go up and talk to a guy in the Middle East, he's going to say, no matter what happens, we'll still there continue to pump and we'll not allow the price to go over $30, $40. We'll just keep it at that till the Americans come up and say that, okay, fine, we'll close our shale creation. We have taken a call today, we had the board meeting, we took a call that today's prices, where they are at this point of time, is realistically low. It cannot go lower than where it is. Though some people may give you the opinion it can go even further down, but we believe as a management it cannot go any lower than this. We don't know when we can go back to the 70s, 80s levels actually. It may not go as well. If that be the case, then it is for us to ensure that we are not going to be unduly hit from where we are at this point of time. So we never took that call to get advantage of the fall in the price of the bunker. Today, since it has fallen, it is now for us to also take judicious steps to ensure we don't have an outflow of money beyond where this $52 or $53 where it stands as of today. This is a management decision that
Reduction in fuel price, that is a very minor part included in that.
You see, year on year, sir, it is substantial, I think, 15 crores.
A couple of questions from my side, sir. Sir, you mentioned that you might have capex and you might have a couple of more ships. I was just trying to understand, have you explored a model whereby you can have an asset-light model, you can maybe charter some ships? Has any sort of thought gone into that kind of a business where you don't have a lot of assets on your
a vessel that you buy? I mean, chartering the vessel is only applicable to the extent of your being able to get hold of another Indian flag. So the number of Indian flags available in the market to charter is very limited. So you're not going to get an asset to immediately replace your requirement, and that's not going to happen. So obviously you have to have the ability to invest, buy the vessels, and operate it on the Indian coast, especially if you want to do the domestic and all these kind of cargo business that's available. I'm sure whether you take a country like the US where they have the Jones Act, which talks only of vessels constructed in America, which at an exorbitant price is the only one that is allowed to be operated along the American coast. At least in India, our rules are not that archaic and not that outdated to say that you have to even build a vessel. You can buy a vessel, fly an Indian flag, and still operate on the Indian coast. So the question of leasing doesn't arise, one, due to non-availability, and two, your ability to operate on the coast is completely taken away if it is not an Indian flag. As far as the tax, what we have the regime today is tonnage tax.
Today we are having a tonnage tax for the shipping income.
I hear you.
Hello. Hello.
Better.
Today we are under tonnage tax, which is applicable to our shipping income. And this part of the tonnage tax is going to continue for next 10 years? 10 years, which we have just renewed last year, actually. So it is going to continue for 10 years. So we continue to have the tonnage tax in effect for the next 10 years or so.
That is the line in which we are thinking, because even the warehousing business that we want to get into, we want to get into with an ability to lease a warehouse that's available. Of course, we may have to invest one or two here and there, but our intention is to obviously work on leased warehouses. And similarly, when we do the e-commerce business, that is again going to be an absolute asset-light business. But in all this, it is important that you also have some brick and mortar that you want people to see and believe that it is all there on the ground for us to do the trade. So yes, as far as SRS is concerned, we can always work on the basis of moving forward into more of an asset light. We can't be saying that we'll be zero asset, but we will be having assets, but we'll be more and more of lighter assets that we may have to play around with that combination. That's exactly the line in which we are already thinking.
Tonnage tax. Besides the shipping income, all other incomes, if any, even for the land logistics side, it is under the corporate tax.
Yeah. Thank you, sir.
Everybody is putting their thought process to see how we can put in our platform for the growth of coastal shipping. And when we are talking about 7%, what we are telling today is just not only the container part, which where we are, which maybe the containerized cargo on the coast may be just about 1.5 to 2%. So it is definitely we are looking at improvement in the coastal services, even for bulk, for the liquid and inland waterways. That's where the first and foremost the government is trying to see, and they are having a region coastal shipping. A committee has been formed and government is working on that to see how we can put it across and make the platform for the growth of coastal shipping. And definitely that will come only when your infrastructure also has to be put. Of course, we are from our side, we are ready to put the infrastructure as regards to the ships and floating assets are concerned. And even if required, maybe on some level for the inland waterways infrastructure, which government is looking forward for the investment in that. But definitely, unless the infrastructure investment has to be done first, and then it has to be followed.
One is the containerized aspects, and one is the non-containerized aspect. If we take an Indian scenario of containerization, which is approximately in the region of 50% of, I'm not talking domestic alone, I'm talking about including international business, is hovers around 50%, whereas the world standard is about 75-80%. So there is a requirement to move a containerization from the current 50% to 75%. This is one area of growth which should happen. And the two is when we are talking about 7% of Indian shipping handling coastal part of it. The world over, if you take developed countries, you talk about upwards of 35% that this happens.
The 7% is possible
Meters of weight distance, we talk about 15% at least should be a thumb rule benchmark. It again depends on whether the cargo has moved by road or in this distance cargo has moved by rail. If it is rail, it is still less. If it is road, this difference keeps going up and down. These are general thumb rules. I'm not talking about point specifics.
And on the scalability of the business side, and also in the context of that slide where we have the capability and the matrix which we have put in, what areas are we today and what areas we want to be in the new course. And on the ship side, what is the scalability? How many ships do we see, or do you have any tonnage handle or total tons handle targets that you have kept for you for 3 years or 5 years? We saw 5 million tons in the slide today.
Yeah, I will limit myself on the cargo side of it, the ship side, can speak about. The scalability level speaks about attractiveness and the capability on both sides together. So you talk about an industry which is high growth industry. So you talk about automobile, you talk about food grain, you talk about agri products. These are high growth industries today. And definitely we would like to be in that sector. And as long as the capability side is concerned, as Chairman has mentioned to you, the capability has come and we have built over a period of 2 to 3 decades. It is not come yesterday to us. And that has helped us to stabilize and focus on certain specific logistic areas where we are good at. So you saw in that matrix where we said we are on a regional liner side and we are on the coastal side, we are on the road side with specifics, and we've also done our freight management side. And we're scaling ourselves from Persian Gulf to Southeast India, India subcontinent. So this is the way we are. This is the space we will be. When we are speaking about it, we are also alive to the new development in the market. That is what the chairman was just saying, that econ is a new business which has come in and is scaling up very high. So we cannot be away from it if we want to grow. So we are very seriously looking at these aspects as he has mentioned. And as we go forward, we will have to devise a model as to how we be there and how we want to do it. It will depend on your studying people.
Required, and one existing service which was there from before. So 2 of the vessels has gone there, and that itself we are doing on a fortnightly basis, the service. Basically, if you want to do a proper service, there is no service like fortnightly. It has to be a weekly service for the customer to have the right frequency. So to start with, we are immediately looking at option of making it a weekly service. That straightway goes for a requirement of 2 more additional vessels of the same tonnage. Then going forward, that requirement should come in very near future. Going forward, definitely, as you see later, from 7%, if government thrust is there to increase it to, and everybody's wish list is to increase to at least double the size, that is 15%, the container trade also has to double up. So definitely the same ratio we are looking at doubling up our fleet to go in line with the development what coastal shipping is looking at.
Basically, Captain has gave you an answer. The growth appetite is very, very high. In terms of the volume, in terms of the demand, in terms of what is likely to happen, is only when we get more and more in demand as we go along. So obviously we have to fall in line to ensure that we are there to take that growth and make the industry more friendly with respect to coastal shipping. The other important aspect is, we have also over a period of time, see when you want to ramp up your operation, one of the key issue of where most companies falter or where most companies have an issue is when they haven't put enough into their backup and the robust system that you really require to manage it. I mean, whilst we were taking these actions to kind of change assets, bring bigger ships, etc., more of the efficiency parameters. One of the things that we have been quietly doing in the organization was to look at improvising and doing a lot of hard work on the system itself that is backing up the growth. We have reached a very decent level of efficiency in terms of whatever we are doing. So on the back of which scalability to any level is very easy. I mean, today, as we are doing with six ships, without having any significant increase in the cost of administration or management, I think we have the wherewithal and ability to deal with at least 12 ships without having a great jump in the cost. Maybe a marginal cost here and there will go, but I don't think it is going to double up. So that is on the back of the systems that we have also developed. Or again, we have also put a lot of money into that to reach that kind of position. So ramping up our operations on the back of a necessity and the kind of opportunity that is likely to come up is certainly not going to be an issue. It is not that the industry is in a bad health. It is simply because of the over-ordering of the assets. And there has been a growth in the trade. It's not that the trade was completely negative and therefore there is surplus. You find there has been growth at 5.5%, but the supply has been far greater than the growth. So essentially the business model overseas out of India or in the international market is extremely weak. We don't see that, at least I don't believe that we are going to see a big change happening in the next maybe 2016 or may not even be before 2017 before we see some level of stability coming back to the maritime industry. That's ground reality. Coupled with the fact that the oil prices are going up and down and the issues in Europe and the kind of scenarios that is now being talked about with regard to the euro and what is likely to happen, the challenges in the Middle Eastern countries. There's relative downturn in China in the sense that their growth is now down to about 6.5–7%, which is not a very healthy sign as far as China is concerned. Taking all of this into account, the industry on a global basis is in a challenging scenario. Cyclicality, part and parcel of the shipping industry. Part of the shipping industry, having our wings also heavily in the logistics segment in the domestic market. So if you ask me this question, whether it is sustainable, my strong belief it is sustainable. But of course the margins may vary in percentage here and there. But the opportunity that is available here, I don't think is going to disappear in a hurry. So I am very strongly of the belief that the extent to which our ability to sustain this model in India, I don't think there is any doubts in my mind. Growth, opportunities available, sustainability, ramping up, profitability, I don't have any doubts in my mind that we won't be there. We operate today with 1700 TEU vessels and containers. I think it will not be too far away before we start operating minimum 3,500 TEU ships on the Indian coast as well. And I think it is not far away. It is only a question of time before we see that also becoming a reality. We have enough business to operate. But I think whether we do that or not, I'm quite positive that in the next year or two we will definitely acquire more vessels into the fleet. So it is not going to make a big impact, even if we have to do with one ship, which is what I think we may have to do, not now. But before that, we would have enough and more of tonnage to take care of the growth and the profitability of the business. We work with Maersk. It's the #1 player in the world. We work with MSC, who's the second largest operator. We operate out of Mundra to Karachi. We do from Athena to Mundra. We do a lot from Cochin and Tuticorin into Mundra. The third largest operator is CMA. Apart from that, there are a number of other players as well for whom we do feedering business. In terms of the customers for the SRSL business, we have a number of corporate customers who are part of us. We work with a number of freight forwarders. If you want to know a couple of names, we want to advise them.
We're dealing with all the tile manufacturing companies you can talk about in India. Anybody is definitely working with us. We're working very closely with Food Corporation of India. We're very closely working with galaxies which are extensively into liquids. We are with the terminals. We are working with DP World with respect to the terminal operations for other segments. So we work with almost all the cotton people, those who produce naan like KBR, they talk about Shambhala, any of these who produce practically about 85–90% of the cotton yarn, cotton movement. I'm just putting a few names.
And sir, regarding
the Corporation of India is about movement of cargo to Northeast using Bangladesh as a port.
Sitting around the table, it shows the level of interest and enthusiasm that you have for an industry that we are in. But I must tell you that in the last so many years, I don't think the government of India also had the kind of enthusiasm and interest in the industry that we are in at this point of time. Either listen to us and they're not unable to do anything, but now we have a government which they do realize that it is important to deal with all of these things to ensure there is a total growth.
today, if you see there, the cost of operation has remained more or less the same, although the revenue has gone up. What has triggered that is basically the increase in the size of the vessel. Number has remained same. We are still operating the 6 vessels. We were operating the 6 vessels earlier also. But at the same time, with the same vessels, and we have kept the cost to the same level while we were able to increase the revenue. That's how it is going to reflect if you add on more and more. So
the value at which we are buying even now, from there it is only getting better and better.
I will now request you to join us for high tea. Thank you so much.